Snap reported quarterly financial results that disappointed stock market investors. And of course, I'm not happy about that because I've had Snap stock rated as a buy all year long here in 2025, and the stock is down almost 34% year to date in 2025. It's been one of my worst ratings this year. But I wanted to review and share with you the details from the company's latest financial results and update my recommendation here and let you know if I think this is a buying opportunity on the dip or if we should finally give up on Snap and move on to other investments. Let's jump into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so Snap in its recently completed quarter, which ended on June 30th, 2025, reported $1.344 billion in revenue, and that was up 9% compared to the same quarter last year. Among all social media companies, including Meta platforms, Pinterest, and Reddit, Snap reported the slowest revenue growth in the most recent quarter. The other social media companies reported revenue growth. Meta platforms and Pinterest reported revenue growth closer to 20%, while Reddit reported revenue growth closer to 60 to 70%. So Snap reporting revenue growth of just 9% compared to other social media companies was a real disappointment. Additionally, Snap reported losses in monthly active users from the United States and Canada, a very lucrative category that generates the highest average revenue per user, while rivals including Meta platforms, Reddit, and Pinterest all reported increases in that geography. So it looks like Snap is falling behind in the social media industry. It looks like its product is not as viable as competitors. Now, I'll share with you some anecdotal evidence. As you might already know, I teach university classes and I have hundreds of students, usually every semester. And I typically have students do a stock market research project. And one of the companies I had my students follow earlier in 2025 was Snap. And they reported back. And during the presentation, the students talked about how they don't use Snap anymore and their friends are not using Snap. And I found that to be interesting. And I ran a little informal survey in the classrooms, asking the classrooms to raise their hands if they agreed with what the presenters were saying. And they seemed to all agree that Snap is now less attractive and their generation are not using Snap as frequently as they previously were. So I found that to be interesting. And of course, it's just a small sample size, but I thought it was interesting and I thought I'd share those details with you in this video. So Snap's operating loss worsened in the most recent quarter. They lost $254 million in operations in the same quarter in 2024, and that worsened to $260 million. But looking at it on a 6-month basis, they still showed considerable improvement. In the 6 months that ended June 30th, their loss improved from $587 million to $453 million. Now, Snap has a lot of non-cash expenses, most notably in stock-based compensation. So the company still generates positive cash flow, even though its operations income is negative. In fact, cash flow from operations improved to $88.5 million, up from negative $21 million in the same quarter last year. And for the 6 months ended June 30th, cash flow from operations improved to $240 million, up from $67 million. This was primarily the reason why I've had Snap rated as a buy. One of the reasons why, because the company is generating healthy free cash flow. And as you know, the user-generated content business model is one that I find very attractive. I have all of the social media companies' stocks rated as buys. Meta platforms, Reddit, Pinterest, Snap, I've had them all rated as a buy all year long in 2025. The others have performed really, really well. In fact, Pinterest, as I published a video a few days ago, Pinterest was the latest stock I purchased. And one of the reasons is because I'm bullish on the industry overall, the user-generated content business model is very attractive to me. It's low cost. People engage on the platform, and Snap gets to benefit from those engagements. They're not paying people to engage and share and comment and like on these platforms, but they're still benefiting from those engagements. So I like the business model. Snap has been the underperformer among its peers. So the company reported that they increased the number of monthly active users to 932 million. This was an increase of 64 million or 7% year over year. They are the second largest in terms of monthly active users behind Meta Platforms, which boasts closer to 3 or 4 billion monthly active users. And then Snap has 932 million monthly active users. Pinterest is up there with 500 million around 500 million monthly active users, and Reddit has less than 100 million monthly active users. But Reddit is growing the fastest in terms of percentage year over year increase, and Snap is the worst in terms of the most lucrative category of monthly active users, and that is from the United States and Canada. So let me share those details in user growth from North America. Snap reported data going all the way back to the first quarter of 2024. And you can see for 4 consecutive quarters, they were flat at 100 million. And then in Q1 2025, they lost 1 million down to 99 million. And then Q2, they reported another 1 million loss down to 98 million. So they're losing monthly active users from North America while others are gaining monthly active users. And I guess this can confirm that anecdotal evidence I provided from my classroom presenters who talked about how they're not using Snap as frequently anymore. I guess this is a point of evidence that coincides with that, right? I know they may have exaggerated saying that nobody in their generation uses Snap anymore. That might be an exaggeration. But the data does clearly show that Snap is losing monthly active users from North America. And here's why it's important. If you look at the average revenue per user by region, Snap breaks it out between North America, Europe, and the rest of the world. And you can see average revenue per user from North America is $8.33 compared to $2.65 from Europe and just 96 cents in the rest of the world. Marketers are more interested in influencing the purchasing decisions of people in North America because people in North America have more purchasing power. So they're more interested in those purchasing decisions. And that's why these folks generate a higher average revenue per user. So that can explain why Snap's share price is underperforming year to date in 2025, primarily because of the losses in monthly active users from North America. So I calculated an intrinsic value per share for Snap, and this calculation showed the stock should be worth $28 per share. The current market price is only $7 per share, signaling a significant undervaluation. One of the characteristics of social media companies and social media stocks is that they boast a relatively low beta, which measures risk by measuring the price performance of this stock compared to the S&P 500. A number below 1 means that the price is less volatile than the S&P 500 index. So Snap's beta is really, really low, and I actually adjusted it higher because I think Snap stock is more risky than what its beta indicates. So I adjusted the beta by multiplying it by 1.25, thereby increasing it by 25%, but it still boasts a beta of 0.775 even after I adjusted it upward. Still, the stock looks undervalued at current market prices when measuring by my proprietary DCF. Now, when I go to fiscal.ai, which is my preferred data provider, and retrieve the forward price to earnings ratio for Snap, it also looks undervalued according to this metric. It's trading at a forward PE of 25, the lowest you've been able to buy this stock, going all the way back to January of 24. So you can understand why I've had this stock rated as a buy all year, even though it's underperformed. So do I still think the stock is a buy? I say yes. I think the stock is still a buy, but there are risks. Most notably, the losses in monthly active users in the United States and Canada. If that persists, that's a big risk because those users generate the most revenue. Secondly, out of all the social media companies, my least favorite management team, or in my opinion, the least effective management team, has been with Snap. I haven't been a fan of the decisions of the management team, and I can't give them credit for any big success over these recent years, whereas I can give the other social media companies, their management teams credit. Of course, Mark Zuckerberg with Meta Platforms is among the best. And then I feel Pinterest has done a good job adapting to the changes in the privacy policy from Apple. So I can attribute some success to these other management teams, whereas I can't attribute very much success to the decision making of Snap's management team. Those are the risks, and there's a risk that this is a value trap, but still, risk versus reward here. I like the opportunity for Snap at current market prices.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.